the market crashed.
Global market stock crash at all from Frankie McDonald.
Got a sauce, hot and spicy. Put it on top, young and precisely.
Bitcoin dropped, S&P 500 dropped, Nikkei dropped, HSI dropped, and then you guys see KLC Bursa drop in one candle. Nice drop. So global stock market and Bitcoin crashed overnight. Now it's all down to this thing called carry trade. So who did this carry trade? Japanese investor and traders. They carry their yen to dollar and then they sell off their assets in dollar and then make the market crash. So how does this happen? So that's what I'm gonna explain in this video. Okay, what you are trying to do is borrow your money. Where do we get the lowest interest rate in the world? Japan. Japan provides around 0.4% interest rate. So, which means you need to pay less interest, or whenever you invested into Japanese market, you will getting the less interest also, which is good for debt and then bad for investment. So what the debtors or the traders or the investors do, they take out a very huge amount of loan from the Bank of Japan and then they invest that yen into any other currencies, which is dollar or pounds most of the time. So let's say the example is like you are taking a loan for 10 million yen. Whenever you convert a 10 million yen into dollar, you will getting around $83,333.33. So with the interest rate US or UK giving is 5%, you are investing into their market and then you are getting around $87,500. So whenever you convert back into yen, you will be having 10,500,000. So now you have to pay back the interest rate for the 10 million yen, which is 40,000 yen. So whenever you pay back, your profit is 460,000 yen. But investors and traders are doing this in hundreds of millions yen. So that's why these traders took a huge loan and then buy their assets in stock market like S&P 500, Nvidia, AMD, Apple, Microsoft, and etc. So what Bank of Japan decided to do suddenly? All this while, the interest rate in Japan from 0.0 until 0.1% only. Suddenly, Bank of Japan decided to increase the interest rate to 0.25, which makes attractive to the investors. But what happens at the same time? USD JPY dropped so much. So the investors who are invested their yen into dollars, they have to sell off their assets in the other countries, which is their S&P 500, Nvidia stocks, everything, and then have to pay back their debt, and then they want to invest in their country back again because the increase is very high from 0.04 to 0.25. So they started to panic sell. When they did the panic sell, whole market started to crash. If they didn't sell, they cannot pay back their interest rate in their own country as well. So this makes a panic sell in their own country as well. It takes 155 yen to buy $1. So we moved our yen into dollars and pounds and everything with a higher interest rate, right? So now you have got all this money and you have to invest that money into some other country's stock market which gives higher percentage of return. You guys can see the chart here. The USD JPY dropped so much from 162 to 142 in few days. But those investors took their loan during the time at 162. So for average, per dollar equals to 155 yen. But now it is per dollar almost 142 yen only. So per dollar they are losing 8 cent dollar. So if they have to pay back the interest rate to Bank of Japan, they have to pay extra $1.08, which is they are losing the money. So they have to sell fast. But the time they are selling, the JPY dropped so much, they are losing money. So they want to reduce the loss, they have to panic sell and then pay off here. The free yen era is coming to an end. As these margin loans are called, the underlying assets are being sold and crashing the equity markets. The carry trade is unwinding. So this is the first time for many of you will see in a market crash. Just be very careful. But this is less than what happened in Black Monday 1987. This is what we know as a short-term liquidity squeeze. Nobody knows how long it will last, but there's a desperate selling assets all around the world at any price doesn't. This is an event of repetition such as Black Monday just now. I said in 1987, trillions of dollars wiped out from the market. The Japanese market plunged by 12% overall so far, mirroring 14% drop during the Black Monday. This caused ripple effect throughout the global economy, like whatever happening right now. You guys can see the red chart here. Almost $2.1 trillion market value has been wiped out in the past week, and then $5 trillion since July 16th, which is equivalent to 357 billion per trading day. In other words, S&P 500 has erased 2 times the value of Nvidia market cap in 14 days. Nvidia is the largest company right now in the world. Moreover, whenever the crash is happening, multiple platform crashes such as Charles Schwab, Fidelity, TD Ameritrade, Vanguard, E-Trade, Citi, Robinhood, Plate, Wells Fargo. They all cannot do any transaction. If they also do any sales, the transaction doesn't go through, and then traders might be losing some money as well. And then you guys can see this chart, weeks of volatility index just hit the third highest level in history after the pandemic. Volatility index means the amount of traders trading at one time and then amount of panic or fear is happening in the market. Elon Musk add in, the Fed needs to lower interest rate. It was stupid that they didn't do that until now. He just said Papa Powell didn't do his responsibility. So now all the traders having this drug here, opium. By the way guys, don't forget to subscribe, like and comment this channel. But you guys have to know, the Bitcoin, right, only the retail traders are panic selling. But the BlackRock, Fidelity, Grayscale, MicroStrategy, the mega institution didn't sell even one Bitcoin. The more you sell your Bitcoin, the more they get their opportunity, and then you have to buy the Bitcoin through their ETF, which gives the opportunities to them to make more money, but you are getting less money. So what do you guys want to do? Sell at loss or hold to zero? Simple guys.
I got a sauce, hot and spicy. Put it on top, young and precisely.